Let's start with, Dan, that iPhone number. Below estimates, and it means Apple only sold about 1% more iPhones this quarter than a year ago. We know people are always holding out this quarter for the phones that we expect to come next quarter, but is this disappointing?
I think, Emily, if we look at the actual data, the fact that the ASPs were healthy, and of course we're in a seasonally weaker time, suggests that the overall business remains quite solid. And of course we have new products that are likely to come out in the beginning, early to mid-September. And so overall for iPhone, I think the numbers were just fine. And of course, as we see the services results and other products which suggest that wearables, the AirPod, watches are doing well, really suggests that the platform is broadening out and you have multiple growth drivers, which we think it makes this a very interesting story over the next couple of years.
Well, everything else looked good except for the Mac number, which we will get to. But Romaine, overall, it seems the market is responding well. You know, there were concerns that any sign of weakness here would lead to a downward spiral, but we're not seeing that.
Yeah, I mean, the stock is up about 3% after hours, and a lot of that, as Dan alluded to, is really because of what you saw in services and what you saw in accessories. I don't think most of the market was really looking for much out of iPhone unit sales itself. The expectation generally is that as we get into the next quarter, towards the end of the next quarter, hopefully we should see some growth there. But in the interim, they're still producing a lot of cash, they're producing a lot of profits, and for now, investors seem to be comfortable with that.
Does the Mac number worry you, Dan? This is a company that certainly worked hard, especially more recently, to rejuvenate the Mac line, but this is the lowest quarter for Mac sales since 2010.
The number itself doesn't worry us particularly, and partly because you tend to have product cycles, and so the unit numbers, depending when you have new products launched, can be impacted in a given quarter or a series of quarters. What we think is notable here is that as the company transitions its users to new compute platforms, certainly the iPhone is notable, but it's the newer areas which really give us confidence that when we think about how the Apple is likely to evolve over the next several years, there are other platforms that are going to be able to help contribute to the growth. And that ultimately we think is what is going to create significant value, certainly for its customers, but for its shareholders as well.
And let's take a look at international growth. China performed remarkably well. This is a company where we've been concerned about growth in China over the last couple of years, but they saw 19% year-over-year growth in China, even in the midst of all of these trade tensions, Romaine.
Yeah, it's still performing well. And look, I mean, this is a stock and this is a company, I think, that isn't really generating the excitement that you see in a lot of the other tech spaces. I mean, when you look at Amazon and Alphabet and some of these other names, you're constantly hearing about new products and new services and new initiatives, and that gets investors excited, as it should. But what we're seeing with Apple is a company that continues to grow at a fairly steady pace. It's not parabolic, it's not dynamic, but it's steady enough, and it's attracting obviously a lot of attention from folks like Warren Buffett and some of the other value names out there who are looking for a stock that can be resilient in the face of trade tensions, in the face of an economic slowdown, and at least for now, it appears that Apple is that stock.
Tim Cook hasn't said much about the trade tension, so they are, all analysts, we are all listening for clues, listening to hear him make any indication, you know, about what's going on and whether this will impact Apple, especially if President Trump delivers on his promise to put tariffs on as much as $500 billion worth of goods. Dan, are you concerned about the political issues surrounding us right now and whether that could hurt Apple?
It's something we're watching very closely. And I think, as we know, Tim Cook and the company are reaching out to both sides, as they have for many, many years. And we expect that to be certainly part of what they are going to do. But I think what's important to note here is that the company has created jobs in America, and Apple has talked about investing hundreds of billions of dollars in America over the next several years. And they're also creating jobs in China and, frankly, all over the world. And so when we think about Apple, they are a good corporate citizen who are helping to invest, to build, to innovate. And stepping back, if we think about the App Store and the developer ecosystem, Apple has paid out over $100 billion to developers over the last decade, and that's globally. And so the fact that the company is able to build a platform upon which others are empowered to create, to innovate, to build businesses. We think that should resonate, hopefully, with both the government officials in China and the U.S., and that Apple can really help to be part of a solution, if you will, over time here.
Tim Cook, speaking on the call, says the company is still on track to meet that goal for doubling services revenue by 2020. Also talking about the iPhone, saying that the iPhone 10 was again the most popular phone in the quarter. That seems to be clear based on the especially high average selling price of the iPhone, $724, which is higher than the $699 analyst had estimated. So you could say that the two big businesses here, services and the iPhone, still both going in the right direction, Romaine.
It is. And look, I mean, this is a company that is on track for annual sales this year that's probably going to top $250 billion. There's only two other companies in the world, publicly traded companies, that beat that. And, you know, this is a company that's also going to generate probably over $50 billion in profits. And it continues to do this year in, year out. It's very consistent. We were talking about this on the program last week. I mean, this company and this stock has really become much more of a value play than the rest of its tech and its so-called FANG peers, which are much more growth stocks. But that's actually a benefit to this company. It's a benefit to investors who are already in the stock, and you're seeing it attract a lot more money flow into the stock because of it.
And